So we've talked before about the fact that we work right through the capital stack, but I'm not sure we've ever actually fully explained what the capital stack is. And in the general consensus recently of us trying to jargon bust, then we thought it'd be a good idea to explain the capital stack. It's relatively simple, but it's a crucial part of what we do. The capital stack is, as it said, is the stack of capital that goes into a development project. So it starts at the bottom with your bank funding, your senior debt, and that's arguably the lowest risk. It's usually the cheapest debt, and it's also the largest portion. So as a general rule, your bank or your debt funder or your niche property senior lender will come in, take a first charge over the asset and lend you the bulk of the money you need to do the development. Traditionally, in the olden days, you would then top that up with your own cash and to the 100% of what's required. But these days, with costs increasing, interest rates increasing, a need to move onto sites quicker before you've completed the other sites that you're working on, many developers need to maximise their own personal equity by employing different lenders within the capital stack. These days, above the senior debt, you'll quite often find a mezzanine slice, as we call it. Mezzanine lending is the next tier up, as it sounds, and it's higher risk, it's more expensive, but it's still usually provided by an institution who provides mezzanine debt. They may also provide senior debt, and if they provide both, then it's referred to as stretch senior. But that will often be 5, 10, 15% above what you borrowed from the bank in terms of the amount of the 100% that you're borrowing, leaving you with less to find in your equity. Then, traditionally, after mezzanine finance, you would find the borrower put their own equity into the scheme and topped up to 100. Again now, with the pressures we've discussed, we quite often find another layer, which is equity, but it'll be third-party equity. So it may come from a private individual, it may come from a syndicate of private individuals, it sometimes comes from the contractor who's working on the project and they want to put their money into the scheme. It ranks in terms of security behind the bank and the mezzanine funder, but it ranks usually ahead of the ultimate borrower and the developer. It's high risk, it usually carries a profit share rather than an interest rate, and again that then reduces the amount that the borrower needs to put in their liquid cash. Important thing to mention here is the more layers you put in, the more complex it becomes, the more costly it can become in terms of legals and monitoring surveyors and valuations, and also the more costly that those debts become in terms of an interest rate. It's also important to remember that most banks, senior debts and mezzanine lenders, will still want to see the borrower with some skin in the game, as they call it. So it's rare that you'll find a situation where all the money can come from a third party, whether that's an individual or a bank. So as a developer, you're always going to need your own equity into a scheme. But again, as part of our financial architecture model, we'll help you structure that. We'll offer you examples of how it could look in each different scenario and model what the cost of each is going to be. And you can look at your return on capital and what it allows you to do. Quite a simple concept, probably made slightly complicated. So if you need any more information, would like to chat it through with us, just give us a call.